Palantir has decided to move from the New York Stock Exchange to the Nasdaq, which could be a major game changer for the company. This strategic decision isn't just a routine corporate announcement. It could significantly impact Palantir's future path. Palantir has skyrocketed almost 1,000% from its 2022 low of $6, with an incredible 270% surge year to date in 2024. We're talking about a performance that puts it neck and neck with Vistra for the title of top performing stock in the S&P 500 this year. Pretty impressive for a company that only joined the index in September. But on November 26th, Palantir made its move to the tech-focused Nasdaq Global Select Market. Now, like me, you might be wondering, why make this move when things are going so well being added to the S&P 500? First off, it just makes sense. Palantir is a tech company at its core. Founded in 2003, they've carved out a unique niche in data analytics, serving both government and commercial sectors. With a market cap of roughly $140 billion, they're not just playing in the tech space, they're one of the major players. Think about their journey for a moment. They went public in 2020 at $10 per share. And like many IPOs, they spent about 4 years finding their footing in a consolidation phase. But when they broke out in November, the stock has seen a 40% surge since then. When companies join major indices, they often see increased liquidity and stock appreciation. Since the September 6th announcement that Palantir is joining the S&P 500, it has climbed an impressive 110%. With an average trading volume of around 92 million shares, they're already showing strong investor interest. Speaking of investor interest, let's talk about institutional ownership. Major institutional investors have been increasing their positions in Palantir, with current institutional ownership sitting at around 34% of shares. This relatively low institutional ownership compared to other tech giants actually presents an interesting opportunity. There's still plenty of room for institutional buyers to come in and drive the price higher. The company's recent financial performance has been nothing short of remarkable. In their latest quarterly earnings report, they showed significant improvement in their commercial business segment, which grew by 23% year over year. Their government business has remained strong as well, with several new contracts secured in both the domestic and international markets. But let's be real here. This move to the Nasdaq feels more like a strategic positioning rather than a necessity. It's about being where the tech action is, potentially joining the Nasdaq 100 index and catching the eye of tech-focused investors. Think about it. If you had a tech company, wouldn't you want to be trading alongside the giants like Apple and Nvidia? I know I would. Looking at the potential benefits, joining the Nasdaq 100 could be huge. We're talking increased visibility, higher demand from index tracking funds, and enhanced credibility in the market. But there's no guarantee. They'll need to meet specific criteria and timing requirements. One aspect that really sets Palantir apart is their commitment to innovation in the AI space. Their artificial intelligence platform, or AIP, isn't just another AI tool. It's a comprehensive solution that's already being implemented across various industries. They've reported that over 300 organizations have already started using AIP since its launch, showing remarkable market penetration in a relatively short time. The company has also been making strategic moves in terms of partnerships and collaborations. Their recent PIPE deal with Surf Air Mobility in October 2024 shows they're not just focused on software. They're looking at how their technology can transform traditional industries. This kind of cross-industry application of their technology could be a major growth driver in the coming years. Looking at their financial targets, they're aiming for more than 30% annual growth through 2025. This isn't just an ambitious goal. It's backed by their expanding customer base and increased contract values. They've been particularly successful in converting pilot programs into full commercial contracts, which speaks volumes about the value their solutions provide. Now, let's talk about market positioning. While many tech companies are trying to capitalize on the AI boom, Palantir has a unique advantage. Their experience in handling complex, sensitive data for government agencies gives them credibility that many newer AI companies simply can't match. This expertise in secure, mission-critical applications could be invaluable as more industries adopt AI solutions. But in terms of stock performance, we're in uncharted territory. The recent 55% climb since earnings could be the start of a push to $100 per share, but there's no historical performance to guide us. The stock is simply unproven, with no established trends in its history. Will it be a smooth ride benefiting from the AI boom, or are we looking at a volatile journey with deep swings? These answers will be revealed in real time as the stock moves and the trend unfolds in front of us. Exciting for some, stressful for others, depending on how attached you are and how much you are risking. Risk small and remain neutral is what I always tell people. Palantir should be part of a portfolio of good stocks. We simply hold and compound winners while cutting out of losers. The potential risks shouldn't be ignored. Palantir faces ongoing scrutiny over its government contract, particularly with intelligence agencies. There are concerns about privacy and ethical implications of their technology as well. Additionally, the AI space is becoming increasingly competitive, with both established tech giants and innovative startups vying for market share. However, what sets Palantir apart in the AI space is their focus on complex, mission-critical applications. While other companies focus on developing general-purpose AI tools, Palantir has been rigorously testing its software in highly demanding environments, ranging from counter-terrorism initiatives to supply chain optimization. Their software is not merely theoretical, it's been validated in real-world, high-stake scenarios. Looking at the chart and applying technical analysis, the stock has shown strong momentum since breaking out of its consolidation phase. The $100 per share target seems plausible if they continue to establish themselves in the AI space. But as already mentioned, and it is always worth repeating, the path there, that's the unknown. With their strong media presence attracting day traders, we could see some significant volatility. Palantir's move to the Nasdaq isn't just about changing an exchange listing. It's about positioning themselves at the heart of the tech revolution. Their unique combination of government expertise, commercial growth, and AI capabilities puts them in a sweet spot for future growth. Palantir is poised for significant growth in 2025, and two other stocks, Nvidia and Vistra, are also on a similar trajectory. Both have shown significant growth in 2024, battling it out for the best performing stock in the S&P 500, and their momentum is showing signs of continuing. Watch this video to learn which one you should add to your portfolio for continued growth in 2025.